All right, now let's head straight to the markets now for the TGIF trade and the last trading day in November. And if we look at the NGX there, we're already seeing weakness at intraday, 0.19%. Are the bulls going to win this month? It's looking ribbed for the bears at this point. For the Johannesburg Stock Exchange, that's down 0.22%. So we're also seeing weakness with the in South Africa. Other markets we track in the region. Let's look at Kenya and so we see Egypt. EGX30 closed yesterday up a big 1.33%. Not a bad move. We're looking out for. We could take that trade as a last one for November, but they do trade on the weekends, 30,242. Then we see the Kenya, the Nairobi Stock Exchange, closing yesterday, marginally down about 0.03% at 110 points, 25. All right, let's get a review of the fixed income market and to see how it's played out for the whole of November. And joining us for that, now we have Princess Iriwoba, a fixed income dealer at FSDH Merchant Bank. Great to have you on the show.
Good afternoon, Ladi.
Good afternoon. So talk to me about, let's look at activities so far now from the FGN and saving bond auctions, NTB, FAC inflows, NPR, and all of that good stuff. How did it impact the fixed income market overall in November?
Thank you. November was a month of record highs across different asset classes you've mentioned. November, we had 2 NTB auctions, and they printed at really high levels. And we also had the bond auction printing at record high levels. For this November, we had the 4th November auction printing at a record high of 23%. That was the highest we saw in the market up until that auction. And the second auction printing at 23.50. That really was a high for market. And we saw that feed into the bond auction with the 5-year paper and the 7-year paper printing at 21 and 22%. Generally, market was largely bearish in November, and this was driven by system liquidity and OMO activities by the CBN.
And talk to me about open market operations so far and the cash reserve ratio policies. How did that impact liquidity?
November generally was largely tight. And first week in November, we had CBN come to carry out the OMO activities, and that closed around 24.28%. About 1.5 trillion was raised at that auction. And that resulted in market being largely tight. We've also seen weekly the statutory CRR activities being carried out by the CBN, where the CBN informs the bank vis-a-vis your regulatory ratio. For commercial banks, it's currently at 50%, and for merchant banks, it's currently at 16%. CBN has weekly carried out those statutory debits from the system and the OMO auction. So far in November, we've had just one auction. We're about to wrap the closing day, last trading day for this month, and we had just one OMO auction in November. We expect that post-FAC payments that started coming to the system 2 days ago, that there should be another OMO auction next week. That's the first week in December.
And how might, global interest rate trends, influence the domestic fixed income yield? Because we've seen, a lot of rate cuts so far from, developed economies and even right here in Africa, but we're still going in the opposite direction. So what are you seeing with that?
Earlier this week, there was the MPC meeting, and like you rightly said, whilst it seems like we're going in a different direction than what we are experiencing globally, we've noticed that the pace of that cut has reduced. The previous MPC meeting, we had NPR hiked by 50 bips, and this last meeting this week was hiked by 25 bips. We've seen the Fed hike by cut rates by a total of 75 bips this year. However, the minutes and communique indicates that because of the inflationary pressure still persists, right, that that pace of rate cut on a global scale might slow down going into 2025. we expect that that forms some form of benefit for Nigeria, given that our rates were still at elevated rates. So for FPIs, it's good levels. The carries are going to be largely attractive. Nigeria is also coming into the Eurobond market in December. We expect that that should offer our current levels or yield levels should offer an attractive carry to FPIs, irrespective of the fact that the global scene been some rate cuts. I expect that the consistent inflationary pressures would result in the global Fed, the US Fed, the ECB, the BOE reducing the pace of that cut going forward, just to still keep global inflation in check.
About that 25 bips hike, by the MPC for November, some were expecting 50 bips. So it's been described as a dovish hike at this point. So is that pointing us towards maybe a hold going into next year or some kind of cut for Nigeria?
Yeah, like you rightly said, market expected 50 to 100 bips increase at the last meeting. However, a 25 bips, and like the governor rightly said, a lot of these are lagging. Some of the indicators are lagging, and from the communique, it speaks to the fact that the committee is looking at the ripple effect of some of the rate hikes that they've done this year. I think we've done a total of about 875 basis points, and we expect that some of the impact that the committee expects will come in following months. I would say that in the coming meeting, the next meeting in January, market is largely going to expect a hold, given the fact that just a 25 basis points rate hike occurred. And by January, we also would see how it plays out on the global scene. If the Fed and the ECB continues some form of rate cuts, I believe that our current CBN governor will be posed towards a hold compared to a potential rate hike.
All right, we'll see if we get some kind of surprise in January. So what are your year-end expectations? That's for December. I know most markets are expecting some kind of Santa rally.
Yes, market largely expects a Santa rally, and that's largely driven by trend. Bringing it local, we typically see some form of disbursement into the system from CBN in December. Also, we expect that liquidity is supposed to drive some form of rally. Also, we expect that with the Eurobond issuance that should happen early December, the supply of instruments should significantly reduce on the local side, and that should push some form of rally. Markets, largely asset allocation activities by the buy end, should also push some form of rally into the end of the year. So generally, our outlook for yields are lower going into December.
All right, we'll definitely be looking out for all of that. Thank you so much. It was great having you. That was Princess Realbash's fixed income dealer, FSDH Merchant Bank. Thank you so much. All righty then, let's get a check on what's playing out with U.S. markets. We know for Wednesday trade, markets in the U.S. lightly fell as investors took some risk off the table following big November gains. But we'll see for the futures there. We see the Dow Jones Industrial Average 0.24%, 0.21% for the S&P futures. So in positive direction with the tech-heavy Nasdaq 20,884 points, 0.34%. Up. So, we had that whole Thanksgiving trade for other markets that were open. But it's Black Friday, and we're seeing some positive signs for most of the markets here we're tracking in the U.S. Let's get a check on what's happening with Asia now. So Asia Pacific markets mostly lost ground today with the Nikkei down 0.37%, 38,208 points. The Kospi big 1.95% dip. On the flip side, Hang Seng Index staying up 0.13%, 19,394 points. Other markets we track in Asia at this point, when we see those South Korean stocks leading losses. Other markets we track in the region, that's a Nifty 50 there, that's up 0.76%, 24,098 points. The Shanghai Composite up 0.93%. So definitely not looking bad for most of the markets we track for that trade today. Let's take it on to Europe now. See, the political climate is getting rougher right there in Berlin as Germany is preparing for snap elections. That's weeks after the three-party coalition government failed. And one of the reasons for that was supporting as a fiscally conservative measure there. But we'll definitely find out what's playing out in Europe.